Welcome you all in the second module, session 3, creating financial model. Right. So in this session, we are going to cover output blocks and determine audience. So two things we are going to cover in this session. A few important points we have already discussed about the creating a financial model, like identifying the problems, gathering data, calculations, inputs, and two important points which are remaining in creating a financial model that we are going to discuss in today's session. So output blocks is what? Output is the face of your model, right? So both inputs and calculations work from behind to build and output blocks. If the back work is well done, the result will also be good. Basically, the end users of the model is more interested to know and to understand the output block. So basically, output block is what the final result, right, which is showing the actual result that you are going to build with the help of various calculations and inputs, right? So when we are representing our financial model, it will be through the output blocks only. We are not going to represent that what are the calculations we have done to develop this model, what are the inputs we have used to develop this model, but what we are showing to the final users, the output blocks, right? So output block is the face of our model, so it should be very attractive. The face of the model should be very attractive, very understanding, right? So now I'll show you that is how this output blocks look like. See over here. So now we will discuss about this output blocks, right? So let's say if I'm developing a model uh, for the future income statement and balance sheet, right? And I'm developing this model for the management. So management is not very much interested in this inputs information, and they are not even interested in the assumptions, right? And they are not even interested in the calculation part, but they are interested to find out or to know about the forecast, that is what would be the income statement in 2021, what would be the income statement in 2022, 23. It means what would be the income statement and balance sheet position in the future, right? So output blocks is representing that what results will get in future. So it's very important to understand this output block. It should be in a very representable manner, so that whoever is using or whoever is looking to this model, they are able to understand it properly, right? So now we will start, that is how to build this output block. So basically, as I told you, that is all the assumptions, all the inputs work from behind, and this output block is the face of your model, right? So under this model, what are we doing? That is we are developing an income statement for future, and we are developing a balance sheet for future, right? And over here we have mentioned the historical data, right? Historical data for 2019, and on the basis of 2019 we are developing or we are forecasting for 20, 21, 22, and 23, right? So definitely if you are developing this model, we need to put some inputs. So these are the inputs. Sales, historical sales is an input, cost of goods sold is an input, gross profit, that as I told you earlier also, we have to put over here a formula, and then this formula means that is equal to C3 minus C4, and then is equal to, we will get this 20,000. Directly we should not put this 20,000, right? So everything is linked, as we know, that is everything is linked in financial modeling. So here also we need to link this gross profit with the sales and cost of goods sold. So once So that over here, if you'll look over here, that is, if there is change in the sales and change in cost of goods, or automatically that is, a gross profit is going to change. And what we need to be, again and again, we need not to put the formula. Here we have put it the formula, and then if we'll drag the formula till here, then automatically the results will come, outputs will come, right? In the same manner, we have to do for the balance sheet, right? Now, what are the assumptions? Given assumptions are increase in sales, decrease in cost of goods sold, increase in current assets, and increase in long-term liabilities, right? So these two elements which are related to the income statement. So these two assumptions are related to the income statement. So once we are forecasting for 2020, we have to consider both the assumptions, right? So here we are calculating the sales value for 2020. So what is happening in the in 2020? We are assuming that is, and the assumption is, it's not like that is we are just assuming it. It should be realistic. It realistic in the sense that it should be feasible, right? We have decided our sales will increase in future by 10%, and there are various measures we have taken to achieve this, right? We might be we have launched some new items and new products, right? And we did so many sales promotional activities. Due to that, we are assuming that increase in sales by 10%, right? So over here we have put it, and then over here we are putting that is 10%. Now this 10% we are considering that will continue for 2021, 2022, 2023. So here we need to put when the rate of increase in sales is same for each and every year. So again and again we need not to change, right? So over here B8 we need to fix it, right? So this 10% for each and every year we need to fix it, and for that we have to put a dollar sign, right? So dollar sign is what? That is fixing that particular cell. It means the value of that cell is not going to change. I have mentioned over here also, that is command to put a dollar or fixing a value is to press Fn. If you'll press Fn, it means function, and F4 together, this dollar sign will come, and it means that this cell is to be fixed for all the calculations, right? So in the same manner we have to do for decrease in cost of goods sold 8%. So again and again we need not to calculate it, we need to fix it in the formula, and we have to just drag it, and the results or the output will come, right? Then there are two other assumptions, that is increase in current assets and increase in long-term liabilities. So here we have the data of balance sheet, fixed assets, current assets. Now total of current assets, or sorry, total of assets, right? Again here we need to put the formula. We need not to that is put the value ourselves. We have to put is equal to uh, C13 plus C14, and then enter. So we will get this value. In the same manner, if we'll drag it, the formula will automatically copy, in every cell, and you know not to put formula each and every time, right? So here share capital, then there is current, this is the total asset, then liabilities are share capital, long-term liability, current liability. Then again for the total calculation of total liability is equal to sum of all the cells. Again here we need to put the formula. Then we could put over here check also. Check means whether we have put it every item at the right place or not. So for that we could put over, as we know, when we are preparing the balance sheet, total of assets should be equal to total of liabilities, right? So is equal to, what we need to do is equal to this, the total of assets should be equal to this. If we'll put this function, it is coming true. True means yes, this is correct. Again you could drag it, and then automatically if total of assets are equal to the total of liabilities, it will show true, true, true. It means you need not to check it again and again whether the total of asset and total of liabilities both are same or not. Right? Again, over here we have to link this assumption with all the inputs like increase in current asset, right? So increase in current asset, we have to put is equal to, and then we have to link the assumptions, then only we are able to build a proper model. And here all these cells are reflecting the output blocks, right? So in that way it's very important to understand the output blocks and inputs and assumptions, right? Next point that we are going to discuss in this session is the determine audience. So audience is what that is who are using our model. So that is the audience, right? So it is very important to know about your audience, as the model should serve the purpose of the audience for which they are looking to your model. So there are different type of audience who use your model. Like if you are developing a business model, almost all the managers like purchase manager, sales manager, production manager, research and development manager, etc., they will be very much interested in your model. The model should serve the purpose of all. For this, it should be with the important explanation, right? But you should be extra careful that the audience are not able to manipulate the model. Otherwise, it would be very difficult to track the changes. You should be very careful. They are able to just see the content, the output blocks. They are not able to do the calculations at their own in the model and modification in the model. Otherwise, because one model is to be used by so many participants or so many persons, right? So you should not give the right to change your model to anyone. If you'll give the right to change that model to the different participants, then they will change the model accordingly, and it will be very difficult to find out who made what change, right? So this is again, it's very important to determine your audience. The model should be as per the audience. Right. So, and it's not like that is we are preparing the model for one person. There are so many persons who are using your model. So it should satisfy to everyone, right? Who would like to, that is, who might be interested in that model, right? So that's all for in this session, in the third session of the second week. Thank you.